Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, July 18th, 5:24 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are in an uptrend. Today's action very similar to yesterday's. The only difference was banks and oils led along with technology today. You can see leaders continue to act well, showing bullish there. And then, of course, all five of the major indexes that we track are trending above their short-term 21-day EMA, medium-term 50-day simple moving average, long-term 200-day simple moving average. So all three arrows green there. NASDAQ 100 continues to be extended, continues also to not care that it's extended. So what happened today? Bull stampede continues, making higher highs, higher recovery highs for the three big cap indexes, mid caps and small caps, making 5-month recovery highs, not quite through the February highs yet, but certainly looking like they want to head that way. Here are the numbers. Green again, RG8. This is our 8 ETF, 8 growth ETF composite, up 0.8%. S&P 500 opened down a tenth. The only basically flat to negative is where the major indexes opened today, put in the lows almost immediately, and then just trekked higher. NASDAQ 100 weak. All seven of the big seven weak in the early going. They recovered very nicely, led by Microsoft. There was some news there. In the end, Apple, Amazon, Google down all 0.7% or less. NASDAQ 100 up 0.8. S&P up 0.7. Dow led the way today, up 1.07. Led the way for big caps anyway. Mid caps up 0.9. Russell led the way for the five indexes, up 1.3%. Global diversified 60/40 stock and bond up 0.45%, both stocks and bonds higher. Uh, Emerging markets lagged today, mostly led by China, which is the recovery is not going very well. In-house GROTECTION, another good day, up approximately 0.87%. Just one stock was a drag today. Well, two of them were down. One was a serious drag, that being Celsius, as they agreed to a lawsuit from a pension union on their preservative-free claim was supposedly uh, the issue, but no buyers for Celsius today. But we'll take a look at what did lead the way for our portfolio and the one buy that we did today when we get to the tail of the tape. Let's dive right into it. We'll start off with the S&P 500, and you can see here very clearly higher highs off that 4,400 level where we pulled back a little bit a week and a half ago, and now up 6 of the last 7 days. Can't ask for much more for the bulls. Continue to be now 5.9% extended on the 50-day moving average. Normally, I put the red light out when we hit 6% on the S&P 500 from the 50-day, but again, bulls just don't seem to want to quit. NASDAQ 100, like I said, let's look at a 5-minute chart here. You can see early weakness, and then that's enough. This was about the time that Microsoft announced that they were going to raise their subscription price for their AI-enabled subscription package, and it just took off to the upside with serious buying. A little bit of a late day pullback, but massive volume on this move up from flat to up over 5% at the highs of the day. And that's what led the NASDAQ 100. I just showed the NASDAQ 100. I didn't show Microsoft. Uh, here's the Microsoft chart that pretty much coincides. Look at that massive volume, up over 5% at one point. As I said, you got pricing power, you got power. No doubt about it. That goes for basically any company. Let's go now to revisit the NASDAQ 100. You can see up 7 out of 8 sessions, one minor pullback, just keeps powering ahead. The NASDAQ has not announced the official weights. They were supposed to announce it after the close on Friday. Not sure exactly what they're doing, but I know the weighting of Apple is going to come down quite a bit in the Nasdaq 100. But again, that's going to get spread out among other stocks. And again, that that just really doesn't seem to care. Let's go to the Dow, which broke out today out of this flat base with some relative strength today. You can see breaking out above this 34 700 level, closing at 34,951. Relative strength lagging, but not over the past 3-4 sessions, as the rally just is extending to pretty much all sectors. Let's go to mid caps here. Caps, you can see extending their breakout off the 21-day moving average from last week, not quite to the 499.48 highs of early February, but beautiful cup and handle breakout. That's working very well. Small caps, led by banks and oils, up again nicely, still not quite to the 199.26 highs of early February, but showing relative strength the last couple of weeks nonetheless. Just this big regional bank liquidity issue back at the beginning of March is what has led to their underperformance. But let's take a look really quickly at KRE and making recovery highs above this 45 level. Regional banks acted well, and so did big banks today. A couple of them that reported earnings today. Let's look at KBE. This is the big bank ETF, also making recovery highs. Let's go to the dollar very quickly. Traded in a tight range, up 0.07%. How did that carry over to gold, silver, and gold and silver stocks? Well, they were up regardless of what the dollar was doing today, making higher highs, up 0.9% for silver. Gold, higher high, big breakout. We talked about how we wanted the gold bulls wanted to see a breakout above this little bull flag that was putting in declining tops along the 50-day moving average. Well, they got it today with volume up 1.15%. And GDX, our one portfolio trade today, was to add to our Nugget position. Nugget is the 2 times GDX. GDX up 2.06% today. Nugget up 3.74%. So the gold stocks, once they changed their character by getting back above this declining 21, that was always on the lookout for a change in character like that in stocks and sectors. And, you uh, makes for some very nice setups and for low risk entries. Let's go to Bitcoin. EITO, this is the Bitcoin futures, down 0.63%, making lower lows since this big rally higher at the end of June. Lower lows in the handle below the 21. Kind of surprised that it gave back the all of this big move on 7/13 last week, but that was on a Thursday. Gave most of it up on Friday, actually all of it up on Friday. Now continuing lower is Bitcoin as we wait for the SEC approval of a spot Bitcoin ETF. Let's see, where are we now? Let's flip to bonds. We'll start off with the broad bond index BND, back above the 50-day moving average, but closing at the bottom of its range, up 0.12% on the day. TLT, this is the long bond, up 0.45%. And if you know, if the prices were up, and they were across the board, that the yields are going to be down. Here's the 30-year yield, down 0.56%, sitting on the 50-day moving average. This failed breakout above the 4% level continues to stick. TNX, the 10-year, that breakout above the 4.0 level failing also. Bounced at the 50-day moving average today after a pretty harsh sell-off the last week and a half in bonds. Let's go to the tail of the tape now. You can pause this here. VIX down again. Oh, I didn't show the VIX. Let's show that very quickly. VIX near the lows of its range, so not making lower lows relative to how the indexes are making higher highs, but still very bullish, trending below the 21 EMA. And now to the tail of the tape. June retail sales were below expectations. The Fed actually likes that. Anything that is going to keep them from raising rates, the market likes. We're pretty much a lock for another 25 basis point or 0.25% raise at the next Fed meeting in a week and a half. But is it a week and a half? It might be next week. It is next week, middle of next week. So basically a week from tomorrow. And then also bank earnings exceeding expectations, both regional and some of the big banks. Day count up 6 of the last 7, 31-day rally since the breakout. 6th day above the 80 EMA, 36th day above the 21 EMA. If you take out 2 one-day shakeouts below the 21-day moving average, we're actually 49 sessions above the 21 EMA. That's normally the way we handle a change in trend below the moving average, is that 2 closes below it, 1 close below, sometimes just an anomaly. Well, that happened twice over the last 10 weeks. So call it 36, you can call it 49, but it's a very strong rally nonetheless. And when the wind is at our back, we take advantage of it. 9.1% is the NASDAQ 100 above the 50-day. Both the S&P and the NASDAQ broke their recent resistance areas that I have settled here. So we'll have those reset for tomorrow's video. Action today, 30-minute base, 5-hour higher high, higher low trend, mild fade into the close, basically a mirror image of yesterday's action. Strong gold and silver stocks, regional banks, big banks too, oils, transports on the downside, 3 defensive sectors, staples, utilities, and real estate, solar's a one-day wonder, emerging markets as China was weak, and ITA as Lockheed Martin had a reversal on their earnings report. Here's what we own in blue. Here's a couple of more tickers that we'll focus on today. And as I said, added to NUGT, Nugget, 2 times GDX, approaching the 2.0 level on adjusted beta again. Bottom line for the day, bull stampede continues, led by banks and oil. Let's get to the charts now. And first some things that we don't own that we want to point out strength in. Schwab. We like this because they're one of our 2 custodians, going to be our sole custodian after they merge with TD at the end of September, but up 12.6%, very nice gap up, 23% growth on sales, down on earnings, but the reaction was good. And note 2024 earnings supposed to be up 28%, which almost gives it a 0.5 peg ratio. That's price earnings to growth for next year. So solid recovery. On Schwab, we've got an alert set above the 200-day moving average to see what happens as it reaches that resistance area. 3 big banks that had great days. Morgan Stanley up 6.5%. Bank of America, BAC up 4.4%. 2 big banks, actually. There's another one that I read was up strongly, but I can't remember the ticker. It's not one of the bigger ones. One of the biggest anyway. Microsoft, there's the action up 4%. We already showed that. Netflix showed some strength today also, up 5.5%. And MongoDB also inked a deal with Microsoft. It was up 4.12% today. A couple of other ones that looked good. AI breaking back above the 80 MA and closing above it and above that 40 level, which has been a lot of resistance area for it over the last couple of weeks. Let's go to some of the portfolio names. First, let's look at Lockheed Martin. LMT. You can see initially gapped up, reversed hard, down 3% on heavy volume. That was why ITA, which is the Aerospace and Defense ETF, which tried to break out last week but failed now, why it was down on the day. So what led our portfolio today? Let's go through a few of them. SMCI continues to rock up 5.4%. Live Nation LYV up 3.5%. Very strong, nice, uh, increasing the breakout. Look how nicely that's ridden the 8 EMA higher over the last few months. Let's see what else. Unity up 2.2. Not quite new highs, but bounced off the 8 EMA nicely yesterday. Uber making higher highs. One of our top four holdings up 4.2%. And NVIDIA, NVDA, down most of the morning. Great afternoon strength up 2.2%. I already mentioned Nugget up 3.74%. And NRGU stopped out of half of the position yesterday on the close below the 21. Good strength today, up 4.5%. What else do we want to take a look at here? I think that's going to wrap it. Not a whole lot to say. So, one of the famous quotes from the Reminiscences of a Stock Operator book, which was the story of Jesse Livermore, is buy right and sit tight. And that's the type of market that we're in. We've been fortunate enough that our process got us into quite a few leaders and also into some various sector ETFs and broad ETFs on the S&P 500, and we're just watching the gains continue higher, trying to not do anything to mess it up. In fact, looking back, anything that we've trimmed over the last couple of weeks has ended up going higher. But we're pretty happy with the growth part of the process. Our flagship portfolio is named GROTECTION. That's growth during uptrends, protection during downtrends. The protection part worked nicely during 2022 when the market was in a bear market, and now it's really great to see the growth part kick in. And we appreciate all the kind words we've been getting from clients noticing the last nice 6-7 week run that we've been on. We've also got a plan to keep those gains in place by updating our stops every day, and we'll talk about that as the week progresses. So right now, I think that's going to wrap it up for Tuesday, July 18th. This is Don Vandenbord with Revere Asset, reminding you it's not how much you make in the market, it's how much of that you can keep. Thanks for listening and have a great day.